So I'm gonna read. All right, there we go. So thank you all for being here and on time. I know that it's a struggle running from Zoom room to Zoom room, or especially if we got to go out the house and go to an in-person meeting, but I appreciate you all being here. So this masterclass is presented by Fiscal Finesse. Fiscal Finesse is a boutique Black woman-owned business consulting firm that specializes in solutions that focus on the financial side of your business. So we are experts in helping you become fiscally responsible and fiscally finessed. This masterclass is complimentary because it is brought to you by SoundTransit and the Seattle Public Library. So SoundTransit is very interested in ensuring that they reach a more diverse business audience of BIPOC business owners to ensure their contracts are equitable and accessible. They have goals that include disadvantaged and small business enterprises and will give you more contact information later on in the presentation. So this week we had 4 master classes designed to help you understand both business credit and personal credit, as well as credibility and lending and contracting opportunities. So this is the last one, and we will cover business credit. So this masterclass is about your ability to be ready for contracts with SoundTransit and other corporate or government entities. So you can find a copy of the presentation later on. I'll drop the link for that. Actually, I'm going to get right into it. I'm not even going to give you any stats because we did that the last time. So I'm going to get right into the business category. So for those of you that don't know me, I am Jenna Finesse of Fiscal Finesse Consulting. I have been doing this work for over 16 years by way of coaching small business clients, as well as building personal and business credit. So I've seen tons of businesses, helping them to write business plans and looking at all different types of businesses. So I have determined that each of our businesses fall into one of 3 categories. So they could either fall into failing, fair, or finessed. And just being transparent, I've fallen into all of these categories at some point in my business. But the category that I'd like to be in and stay in is the finesse category. So in this finesse category, what you get is you get a niche boutique business specialization where you can have premium pricing. You never have to discount, right? You have corporate contracts, government contracts, private sector contracts. You have business credit trade lines and multiple revenue streams, including passive revenue streams. So that's what a finessed business look like. And so before we get into the content of today, which again is about business credit, I do want to understand, first of all, where you all are. Are you a startup? Are you an existing business? Are you not even in business yet? So just type in the chat if you are a startup, if you've been in business for quite some time, or if you are a startup, meaning less than 2 years, or you're just thinking about business. And that way I can tailor the message specifically to you. Okay, so I see new business, startup less than 2 years, existing business. What about the rest of you? Oh, and in case you didn't know, this is very interactive. I do require some feedback, or otherwise we could have just sent you the slides, right? So the rest of you, tell me what type of business you have or how long you've been in business. I see existing, startup, less than 2 years. And while the other folks are typing, okay, less than 3 years, wonderful. Okay, while the other folks are typing, I would love to know what brought you to this particular training. What do you want to learn? I know we're talking about business credit, and that's like a large facet of things. We only have an hour in this session. So I want to make sure that I am hitting the mark on what you'd like to learn during this session. So if you have anything in particular that you want to learn about business credit, please place it in the chat right now so I can make sure. Where to start with business credit? Beautiful. I will definitely talk about that. Where to start with business credit? Anybody else? Besides hearing the beautiful voice, I was looking for a refresher on business credit. Okay, beautiful. I will definitely be able to address that as well. And thank you for saying my voice is beautiful. I appreciate that. But yes, this class will absolutely cover business credit, and you'll get a refresher and maybe learn some new things. That's my hope. What else? Anybody else want to share why they decided to spend this afternoon with us? What do you plan to receive? What is it that you really need me to hit on? All right, just open to learning. All right, so let me just go over the objectives that I'm going to go over in this masterclass. So this masterclass will cover factors and elements influencing your business credit, the items that are most needed to actually build your business credit, and then some business credit vehicles. So those are the things that I'm going to cover today. Again, this is 1 hour. I'm not going to go too deep, but it's going to be deep enough. But you do have an opportunity that the Seattle Public Library is putting on to meet with me one-on-one for technical assistance to build up your particular credit. So a little bit about me, for those of you that don't know, I'm an educator. I love to teach. I'm currently teaching economics and entrepreneurship at Seattle Central College. I work at both Seattle Central College and just now taking on some more classes at WSU, so I'm super excited about that. I'm a small business owner. I've been a small business owner since 2009. I'm a financial coach. I'm an author. I'm a public speaker. I currently have 5 revenue streams that include teaching, consulting, my rental income, my investments, and the books that I've written. I've been a credit expert since 2011. I filed bankruptcy twice. I tell people that all the time because I want you to understand that where I'm at today was not where I've always been. And because I've gone through those different trials and tribulations, I can teach someone else because I started from the bottom, now I'm here, okay? So I've helped thousands of people purchase homes and lower their debt through improved and increased credit scores and credit history, okay? So my pride and joy are those 2 beautiful children that's standing beside me. That's my daughter, who's now 17, and my son, who's now 30, and I have 3 grandgirls. So I'm super excited about that. So we are going to touch on business credit, building business credit. So type in the chat if you believe that you can get instant credit today after this training is over. Let's just tell me if you think I'm crazy, if I'm talking outside of my neck, or if you feel like, you know what, I believe in you, girl. We're going to do this. So just type in the chat. Do you believe after this particular masterclass, you can get instant credit? Tell me if you believe that. Thank you. Y'all believe in me. Thank you, thank you, thank you. Okay, so here's the thing. The first class that we had, master class that we had this week, was around credibility. We went over 7 credibility factors. If you have at least 5 of those credibility factors, by the time we finish today, you can get instant credit for your business. And I'm going to tell you how, okay? So let's get started on the factors of business credit. So oftentimes people don't understand what type of things influence your business credit. So they're very similar. We went over the difference between personal versus business credit, but they're very similar to things that affect your business credit as the things that affect your personal credit. So number 1 is the payment history. It's so very important for you to make timely payments on business loans, on credit cards, other financial obligations, any financial obligations, even if they do not report to the credit agencies, because that is going to be important when people are making determinations about you, okay? Your credit utilization. So this refers to the percentage of your available credit that you're using. And you want to keep your credit utilization below 25%. Some experts say 30. I'm an expert and I say 25 because I've seen the difference that that 5% can make. So what that means is if you have a credit line of $1,000 to be able to spend, you want to keep that below $250. And the reason why is because it shows that you have this capacity, this credit utilization that you can use and you're not using it. And so it kind of does a little trick with the system to boost your points every single month, okay? Then the length of credit history is very important. So the longer your business has a positive credit history, the better it reflects on your credit worthiness. So lenders prefer businesses with established credit histories as they provide more and more financial abilities for those different businesses. The next one is public records and liens. So negative public records, such as if you had a bankruptcy, if you have a lien, if you have a judgment, anything like that can significantly hurt your business credit just like it does your personal credit, okay? Then also your business financials. So lenders often review your business financials, including your profit and loss statement, your balance sheet, your cash flow statements. They want to know that you have a healthy, strong revenue going on in your business. And so that your financials shows them that. The last thing is your business structure. So I'm going to give you a quick story. Many of you know Mr. Lewis Rudd with Ezel's Famous Chicken. So we had interviewed him maybe 2 years ago now on business structure. And one of the things that he revealed to us is that when he first opened up Ezel's Famous Chicken, they opened up as a sole proprietor. And I think at that time, they may have had 2 locations. And he was having so much trouble getting funding for Ezel's Famous Chicken because he was a sole proprietor. And what that means is you as the individual, whether you're co-founder or just the single member entity, you are the business as a sole proprietor. Everything is running through your social security number. And so oftentimes when you have a business structure of sole proprietor, you will see that certain lenders will not give you anything. They want to know at least you have some protection through a limited liability company or through through an S Corp or C Corp or some type of entity that is separate from yourself. So it's very important when you're thinking about your business structure and your industry to understand what that means for your credit worthiness. Some industries are considered riskier than others. And that, again, is restaurants. There are some banks or traditional lenders that will tell you, we don't lend to restaurants. We don't lend to certain industries. And they do that because they've already had a certain amount of business with certain industries where they feel like it's too risky. It doesn't benefit us to do that. Or they have a certain amount of that business industry already on their portfolio. And so they decide we don't want any more because that's such a high risk. We'd rather get some low risk or lower risk companies that we lend to. So those are the factors that contribute to your business credit. So please ensure and be aware and also in control of all 6 of these factors before you consider even building business credit. Because if you don't know these factors, then it could hinder you. And oftentimes what happens is you'll be a business owner. You'll go into, bank. I don't want to give a name for a bank, but you'll go inside of the bank and you're looking for funding or lending. And they may say, oh, no, you got to have this credit score. Or, you know what, if you're in this industry, we don't lend to you. Maybe we will in February of 2024. They know these things going in. And so that's why I tell clients all the time, when you are preparing your loan package or your package to receive funding, you want to make sure that you've asked the proper questions so you're not wasting time. Because you don't want to go in there, waste your time giving them all of this energy and all this data and all this information just for them to say, we don't lend to you or we don't lend to your industry. Does that make sense to everybody? I saw somebody that went off mute, but if you could tell me in the chat, yes, that makes sense, or unmute and ask your question, that would be very helpful before we move on. I see a couple yeses. We got more than a couple people in here, so I want to see some more yeses so I can move on. At least 2 more. Does it make sense that you need to ensure and be aware that and in control of all 6 of these factors before you consider building your business credit? Okay, I've seen a couple more yeses, so we are moving on. So before you can build strong business credit, you have to build a strong business, okay? You have to build a strong business. So many times people feel like, okay, I'm in business, I need access to capital. No, Okay. When you're thinking about credit, and I'm probably going to be an unpopular opinion because I know other folks may feel something different, but I do want to say, I tell clients this all the time. You use credit to sustain or grow your business. You use your revenues to start your business. Your business should be solving a problem. If it's not solving a problem, you don't have a business. If you don't have a business that's generating revenues on its own, you don't have a business. You don't need extra capital to start that business. Unless you have something like an app or a high-tech type of thing where it's going to take money to develop this, the research and development, the, putting the app together, design and all those things, that makes sense. And this is why oftentimes those type of businesses have angel. Is somebody saying something? Oh, I thought I heard somebody. Well, this is the reason why those type of businesses have like angel investors or venture capitalists, because it does take money to start those businesses. But what I want to instill in your minds, you use credit to sustain and grow your business. You use your revenues to start your business. Are there any questions or any objections to what I just said? Any questions or any objections to what I just said? I'm going to mute a few of you. If there's no questions, just put no questions in the chat. If you have a question, go ahead and ask your question. Thank you, Jillian. She said it makes sense. Thank you, Laquita. No questions. Okay. So are you saying that you must already have capital to start your business? So what I'm saying, Mahalia, I hope I'm saying that right. What I'm saying is it's not a great idea to just instantly start a business and then start looking for money to fund your business. Because what you need to prove is that you have a minimal viable product. You have an experience that can actually make money. Why go out and get money if you have not proven to yourself and others that your business can make money? Why borrow money to build a business or to start a business that hasn't really, proved the viability of that business? That's what I'm saying. Does that make sense to you? You can go off mute if you like.
Yes, that makes sense. So you're basically saying that the business idea needs to be very strong before you get money involved.
Absolutely. Not just very strong, be actually making money. And this is where I tell clients all the time, you can have a lean startup. Let's just say your idea is to have a restaurant, right? But before you get a restaurant and get all these expenses and bills of having a restaurant, why not start making meals in your home, or having some type of food truck or pop-up shop where people like your food. They will pay the price that you have for it. They will travel to get it. So then you've built up that business and that business model that is strong and successful. And then you go to the point where you go and ask for money to grow or sustain that business. So I hope that makes sense, where I'm saying, don't just start with other people's money. Get other people's money when you're trying to grow or sustain the business. Because I have seen a zillion stories, but I'm going to just tell y'all one story. So business credit can be dangerous. When businesses can't pay back their loans, that means the business is going out of business, and it affects you personally too, not just your business. I'm going to give y'all a prime example. I have 2 clients right now, but I'm just going to talk about one in particular. Their loan payment from the idle loans from going back to COVID is $3,700 a month, right? That is not including the $27,000 a month that they have in regular expenses. Yeah. So they have $27,000, and most of that is payroll. Most of it is payroll. And then in addition to all these fixed expenses, which this loan is also a fixed expense, but they're having trouble paying that back. And so what does that do? That impacts what they do with their employees, that impact their customer service. It impacts everything. When really their business probably could have sustained without it, but because it was available to them, guess what they did? They went and got it. They did not spend it on business expenses. Because this is what we do. We get a lump sum of money. We never had it before. So we go crazy. We go out and buy us a Tesla, or I'm talking about anybody. But I have had clients that have gotten this money, gotten these large, huge lump sums, and they can't even make the payment every month. because it's too much. But now their business is not sustainable because guess what? They have so much stress and pressure for all of these payments that they have to make that they can't even sustain the business that they're in. Mahalia, I see your hand. You can unmute and ask your question.
Yes. So actually I have a friend who is kind of already following your advice. So she is selling like a dessert product, and what she did this past weekend was partner with a restaurant that already exists.
Mm-hmm.
And it's like selling the desserts outside of the restaurant. And I think she's doing it maybe inside the restaurant with another restaurant. Do you think that is a good idea?
I think that is the perfect idea, because what she's going to learn is, do people really like this? Are they going to pay the price that I put on this? Is the demand high enough for me to do my own thing? And also, if I can do it with this restaurant, maybe I can do it with 5 more before I decide to get my own restaurant. And that's building up that anticipation and building up that business to where now, okay, now I see the demand is so high, I need to go get some money so that I can start my own. But you got to have that good problem of having the demand so high that it requires you to go out and get more money. Starting a business does not require you to go out and get more money. And this is a mindset that I love to help people shift away from. You do not need money to start a business. You need an amazing idea where you are solving a problem to start a business. And you need to do that on such a small scale that, oh, it's successful. I've done 4 of those. It's successful. Okay, now I'm gonna do 8. That's successful. Okay, can I do 16? Probably not with my own money. So now I need more money. So that's a mindset that we have to get into before we start just going out and borrowing money. Okay, and that's really where I want y'all to get to and understand that starting a business should not require money. Growing your business requires capital. Okay. And like I said, it may be an unpopular opinion, but I've been in this game for a long time and I've seen some folks just do a lot of wild things and really mess up not just their businesses, but mess up their personal lives. Because once your business goes down, oftentimes that messes with your mental wellness, your relationships, and a lot of other things. Okay. So again, type this in the chat, y'all. To build strong business credit, you must first build a strong business. I need everybody to type that in the chat. I'm going to say it again because I might have lost a few of y'all. To build strong business credit, you must first build a strong business. You can even put it in your own words. Thank you, Miko. You cannot build strong business credit without a strong business. Anybody can go out here and have 5 credibility factors and build business credit. But does that mean that it's going to be sustainable and successful? It does not. I know people right now that have trade lines, like $30,000 trade lines. I know people who have $400,000 trade lines. It's not sustainable because their business model was not sustainable. But I'm going to say this. In order to build strong business credit, you have to establish your credible business. So those credibility factors that we talked about in the first masterclass, I can drop the link to that class if it makes sense for you all to watch that replay for those of you that weren't here. You must have you have to secure a reputable business coach. Go to any business owner and ask them that have been in business for at least 5 years. Ask them, do they have a business coach? I guarantee you 90% of them will say yes. Invest in a business coach, because if you don't have a business coach, it's very unlikely that your business is going to grow beyond where it's at. A business coach is essential, okay? They help you identify ways to best build your business entity, including your credit. They'll create a customized solution for you that's not generic, that you can't just find on YouTube or your TikTok business people. They can help you develop like sustainable strategies in real time. They also hold you accountable to results. Being an entrepreneur is lonely, right? You can go to your husband, you can go to your spouse, you can sometimes even go to your friends. But if they are not entrepreneurs themselves, or if they're not heavily invested in your business, their advice is not going to be what you can get from a coach, okay? So you can apply for business coaching through Fiscal Finesse Consulting, or you can also go to like your SCORE, your SBDC, your small business development center, your veteran business operations center, your women's business center, they all have free consultants. So there's no excuse for you not to have a business coach, okay? So I'm gonna drop in the chat. Do we have someone in the waiting room? This thing asked me if I want to drop it in the waiting room. I'm like, wait, everybody should be in here. I'm gonna drop into the chat that you can definitely go and get this business consulting from one of those free resources. And you can also apply for coaching through Fiscal Finesse Consulting, because one of the best out here, one of the best in the game. I'm just saying. Okay. The next thing is to maintain financial discipline. Always look for strategies to improve your cash flow and your profit margins. Continue making timely payments on all of your financial obligations and keep your credit utilization as low as possible. Not maxing out credit cards. I see so many clients, especially on the personal credit side, where we'll build up their credit. They'll get these credit cards. I'll talk to them 3 months later and I'm like, how's it going? How's your utilization? They're like, oh, I put this on there and then this thing happened and I stopped paying it off, but I'm still paying the minimum balance. I'm like, oh my goodness, you just reversed all that work we did. Please, please, please keep that utilization low. If you cannot afford it, don't buy it, okay? At least until you get to the point where your credit score is built up enough where you feel like, okay, this is important to me, so I'm definitely gonna pay that off, okay? The next thing is to network and build relationships. It is really a true factor, absolutely true, that your network is directly in correlation with your net worth. You got to engage with the business community and attend some type of industry events, build your relationships, and potential opportunities will come to you, not just through lenders or partners, but customers and clients. The more you get out there, the more people know you, they trust you, they like you, they're going to buy from you. They're going to want to be your client. So build up your network and build up those relationships so that you have opportunities that may not otherwise come. I know oftentimes I get calls, like even from, I think about the Department of Enterprise Services. Because we, Black-owned business excellence, have a relationship with them. There's certain things that come down the pike where they just give us a call. We otherwise wouldn't know. If we didn't have that relationship with Shayna and Kim and Linda Womack and those folks, they wouldn't call us. We would not even be on their radar. But when you build up those relationships with folks like at SoundTransit and in different places in Seattle Public Library, as things come down the pike, they think about you and they call you and say, hey, is this something you might be interested in? That comes from relationship, okay? You got to sustain a positive payment history, and I don't even have to go into that because you all know what I mean by that. Another thing, now this is really, 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 really important. Sustain or reconcile your business financials often. I'm going to highlight this real quick. Reconcile your business financials often. I have had clients that will get an opportunity that comes their way. And the opportunity may be a grant, it may be a contract, and they ask, okay, I need your profit and loss statement for the last quarter. They haven't reconciled. So now they're scrambling, or they decide, I don't want to take advantage of that because I don't have all of my ducks in a row. And this is why it's important for you to reconcile those business financials often, so that when somebody's asking you for something, you click a button for reports. Whoop, there's my report. But if you haven't reconciled the last 6 months, and it's going to take you, I don't know, 20 hours to reconcile, I'm just making the numbers up, then it's probably not something that's going to be on the forefront of your mind or something that you're able to do in a decent amount of time in order to qualify. And so that's why it's important to build strong business practices like reconciling your business financials often. And then the last thing I'll say is closely monitor for errors, right? And correct any errors that are out there. Now, this relates to your accounts as well as your credit. And I'll give y'all a good example. I downloaded this app on my phone, and it was one of those freemiums, right? So they give you a freemium, and of course they ask for your credit card number. And sometimes you forget about that stuff. You forget to cancel it. And I did. And so I just happened to be looking at my account, and they were charging me $199 a month. Guess how many months went by before I noticed? I'm ashamed to say, and this is why I can speak on it. I'm telling y'all, I'm gonna expose myself and be vulnerable. 5 months had gone by and they charged me $199 a month. I was so mad. I was like, what are y'all doing? Y'all know I didn't want this. You could tell I haven't even logged onto this app since the day that trial, even before the trial ended. But yet you're charging me. And guess what happens at that point? It's up to them and their discretion and their policies to refund. And most time your bank will only go back 90 days. So they've essentially got 2 $199 payments out of me, and I haven't even opened their app. I no longer even had their app on my phone. And this is why it's important to closely monitor and correct errors, because you could be sitting up here giving folks money that they don't deserve. But now I'm paying closer attention to what's going through my account, because I'm not giving it. I work too hard for my money. What do I look like giving it to somebody? So out of these 7 things, which one resonates with you the most? Which one will you pay closer attention to? And this is just an opportunity for us to be transparent with one another. Which thing on this list of 7, you can type it in the chat, do you feel like, you know what, I probably should focus on this for the next, 30 days, making sure that I have this properly in place? Thank you, Jillian. Reconcile business financials often. Thank you. Anybody else of these 7 things? Is it 7? Yeah, 7 things. Secure a coach and maintain financial discipline. Yes, Miko, I could be your coach. Hello. I just started doing that and forgot what some transactions were. Exactly. I'm with you, Jillian. Once I start paying closer attention, I'm like, oh, I don't need that. Why am I even paying for that? It's so funny. I had a membership at a membership organization, and they sent me an email and they said, hey, we renewed your membership. I'm like, first of all, I didn't tell you to renew my membership. I don't even know if I want to be a member. But guess what? That was another $200. Now I could have probably gone back and say, no, thank you, return my money. But I was like, you know what? I'm gonna let this go for another year and see if I can benefit from it, right? Anybody else? Anybody else? Which of these 5 opportunities to build strong business credit are you going to work on? I need one more person to comment before we move on. I know it may be taking a long time to type. All right, thank you so much. Maintain financial discipline, absolutely. So we're moving on. Remember the credibility factors. I just want to go over this one more time, because remember what I said at the beginning. If you have at least 5 of these, you can leave here today with instant credit. So the credibility factors are your EIN number, your UEI number, which is replacing your Dun & Bradstreet number, your business phone number, business website and email, your business financials, and your business social presence and reviews. Okay. Oh, this particular QR code, you can watch the replay of the Finesse My Business Credibility, and I will drop the link in the chat right now. Okay. So if you want to watch the replay of the business credibility factors, there it is. Now we're moving right along. These are the items that are mostly needed when you want to apply for business credit. Most times, what's the EIN and UEI? Thank you, Mahalia. I appreciate these questions. Very good questions. So the EIN is your employer identification number. That comes from the irs.gov. It's a free number. Please watch the replay and it'll go into a little bit more detail. And the UEI number is your unique employer identifier number, and that comes from sams.gov. Both of those are government numbers that are given to your business for identification purposes, and they're both free. The EIN comes from the irs.gov, and the UEI comes from sam.gov, SAM.gov. Okay, hopefully that answers your question, but they're absolutely necessary. You're welcome. And please stop me anytime, because I love to answer those questions, and I don't want to get too far ahead where you're wondering something and not know and don't feel comfortable asking, please ask me. Okay. So these are the things that are mostly needed when you are applying for any type of credit or lines of credit, loans, and things like that. And I'm going to drop them in the chat. But most times they want to see your business license. They want to know that you have proof that you're a credible business. So any type of legal business entity, your business type, the industry description, that's the type of thing they want to see. The second thing is they want to look at your business financials and your bank statements. And so when they're looking for those financial documents, they're looking for the profit and loss. They're looking for your bank statements. They want to know, is this business even generating revenues? Are you doing anything already as a startup for your business before you need money? That's what they're really looking for. They want to look at your balance sheet, your cash flow statements. They also want to look at your personal financial statements. So most time, if you haven't built up enough business credit on your own where you don't have to be the personal guarantee, they want to see, okay, what's going on in your personal finances? They want to know if you are, how you're doing personally. Do you have any assets? And most times if you have a spouse, they want to know what's going on in their personal finance, and they have to sign off on things when you get a business loan, believe it or not. And sometimes they might want you to put up your house for collateral or whatever other collateral you have, and your spouse has to agree to that. So those are some of the things that they want to see. The next thing they want to see is a business plan. Oh my goodness. They want to see you demonstrate your business's strategy, your potential for growth, how you're going to use the money that you receive, what other money you're receiving. They want to know that you know your market. You have a marketing strategy. You've identified who your market is, those type of things. And then they want to see your tax and insurance documents. If you filed taxes, they don't want you owing the IRS and then coming to them and getting money, because guess what? When you owe different people, then that means they're not going to get their money on time, because you're probably going to pay the IRS because they have a deeper sense of urgency than the bank does. And so they want to know what's going on in your finances. Now, let me say this. That does not preclude them from giving you money, but it does help them in making an informed decision, okay? So they want to look at sources and uses of funds and projections and things like that. So keep in mind that lenders have specific criteria based on their risk assessment and the type of line of credit that you're looking for or that you're applying for. So it's a good idea to reach out to them first to identify what is your criteria. Sometimes, like for example, what I said on the last masterclass, there may be, I'm just going to use Evergreen Business Capital for an example, and I'm using them because they are major supporters of Black-owned business excellence. So I always want to give them a shout out. But one of the products they have, you only have to have a 580 credit score. You can be a startup. They'll give you up to $5,000 at 5% for 5 years. So knowing that criteria in advance will help you to determine, do I want to go over here to Evergreen Business Capital, or do I want to go over here to Business Impact Northwest? They're both micro lenders. They're both CDFIs, and Business Impact Northwest, who's also a proud supporter of Black-owned business excellence, they may have a different criteria. They may say you can have a 540 credit score. So if you have a 560 and you know that Evergreen Business Capital's criteria is a 580, there's no need for you to go over there until you've at least boosted your credit up to that 580 point. You might just go over to Business Impact Northwest. So this is what I mean by asking the questions in advance so that you know where you'd like to go, okay? I do want to say this is a great time to tell you more about the services that we provide at Fiscal Finesse Consulting. So Fiscal Finesse Consulting, like I said, is a boutique, Black-owned, women-owned consulting firm that specializes in solutions that focus on the financial side of your business. We're experts in helping you become fiscally, financially responsible, and fiscally finessed. So we assist our clients with developing their strategic business plans that include their financial projections, that include their customized business credit strategies, grants and loan package development. So if you're looking to apply for a grant, or if you're looking to apply for a loan, we can help you develop those packages, as well as looking at your revenue streams and your pricing models and helping you to improve those so that you can be a sustainable business. So again, you can apply for direct services from Fiscal Finesse at this link, Or you can go to the Seattle Public Library and see about some of the free resources that they have, which they will be doing some one-on-one technical assistance through Fiscal Finesse. All right. But that particular QR code will allow you to apply for services from us. Now, this QR code will give you the presentation that we are using right now. And let me just drop this in the chat again. Okay. So if you're looking to get this presentation on Finesse My Business Credit, there it is. So now let's get into the business credit. Y'all ready? Y'all ready for this? Yeah. So just type in the chat if y'all ready, because I just want to make sure that we are all on the same page. Now we're going to get in the types of business credit and how you can get started. I see a couple readies. We ready? Who was that? Tiffany Haddish, is she ready? All right, so now let's get into it. These are, thank you, Tiara. These are the types of business credit. So you have so many out there, and it really depends on where you are as a business entity. When we first got started, I asked you all where you are as a business entity. Most of you said, some of you said existing. Somebody said a new business, startup less than 2 years. Somebody said less than 3 years. A couple people said less than 3 years. And so it depends on where you are in your business and also where you are in your credit journey. I am going to show you how to go through this in a systematic way that will get you the most maximization of credit, okay? So the very first thing, and you can take a screenshot of this, again, you will get copies of these slides, but it's just good to know that these are the different types of, and there's way more than this, but these are the most popular that I'm gonna go over because we only have an hour, right? The first one that I wanna go over is Credit Strong. Credit Strong, to me, is the absolute best way to build business credit. You can also use Credit Strong to build your personal credit. But what Credit Strong is, it's like a certificate of deposit. Basically, you choose which amount you would like. And what it does, like say, for example, you choose a $1,000 vehicle. And so you only pay, I don't know how much, I think maybe $50. I'm in a vehicle that's $25,000. And so I pay $250 a month for 10 years. So what that does is it reports to the credit agencies as if it's an installment, and it also allows you to build that credit up. You're building credit and you're building savings. So every payment that you make towards Credit Strong, it goes into an account, and when it matures, you get that money back. So you're building a savings account and they're reporting to the credit agency at the same time. So again, you could do that for your personal credit and your business credit. So this to me is the absolute best way to build business credit because you're building a savings account as well. Okay. And of course you can write off that interest, and you could talk to an accountant about that because that's not who I am. But I just want to make sure that you all know this is the absolute best way to build business credit because you're building that savings at the same time. And there's no other products like this. I mean, for your personal credit, there is. You have Self and you have Credit Strong. And I believe there's another one that just recently came on the market. I like Credit Strong. The other thing I like about Credit Strong that is not the same as Self, if for some reason you have to stop paying, okay, they close your account, they send you the money, and it doesn't negatively report to the credit agency. But if you do that with Self, if you close it, it's like you defaulted on your loan. You don't want that. So this is the reason why I push Credit Strong more than I push Self, because I know that if you stop paying on Self, yes, you get your money back, but it also reports negatively. And that's not helping you, right? So the next credit vehicle that I want to go over is trade accounts. So with these trade accounts, what you do is you get a net 30, net 60, net 90 terms. And what that means is you get the item today. For example, if I went to, let's just say I went to Quill and I ordered this apple juice. And so the apple juice comes in 2 days. So when I place that order, I can drink all this apple juice. I can sell this apple juice, retail or wholesale or whatever, but I don't pay for it until 30 days later. So it's given me an opportunity to actually generate revenues before I pay. And that's actually business credit. So the fact that you have a trade account that's net 30 terms, net 60 terms, net 90 terms, and you don't pay for it until then, they actually report to the credit agencies. So there's tons of accounts like that, and I'm going to give you a list of those in a moment. But that is the easiest way. If you have at least 5 credibility factors, you can get these trade accounts. And Quill is like Walmart for your business. Uline, they have a lot to do with packaging and things like that. You can also do this with, other entities, and I'll give you a list later. Okay, the next line of credit, I don't know what happened to my, let me see here, my words on here. So the next one, after you have at least 5 of those trade accounts, and again, I'll give you a list in a moment, but after you have at least 5 of those and maybe 1 billing cycle, then you can move on to getting some revolving store credits in your business name. Yes, thank you, Laquita. Amazon is absolutely on the list. If you open up an Amazon business account, they give you instantly net 30 terms. If you have that account for at least 2 months and build some transactions through there, you can apply for their business credit card, which is American Express. And I've seen most of my clients get that American Express card. Their limit on that card is $15,000. That's instant credit. Now, I'm not going to say anything about the rates, okay? Because it's kind of high. But my point is, it gives you instant credit, and we should be paying these things off instantly anyway. So we're not paying interest. I don't pay interest. I just want the points and whatever benefits I can get from the card. But I'm paying that card off because I'm not paying nobody's interest. Okay. So definitely, Quita is right. You get the Amazon Net 30 account. You have it for a few months. You run transactions and pay it off. Then you apply for the Amazon Business Credit, which is the American Express card. They usually will start you off. I mean, I honestly have not seen anybody get less than $10,000 on their Amazon business credit card. But that's an instant, revolving store credit. And of course, you can use that American Express anywhere, right? It's an Amex. The next thing after the store credit is the fleet credit. So this is where you get credit from different fleet organizations. So you want to have at least 5 of the trade accounts. You want to have at least 2 store credits, and that can include your Amazon. And then you go to the fleet credit. So these usually are a higher amount, a higher limit. And this is usually used for like buying cars, repairing cars, maintaining cars, getting gasoline or anything like that. But those cards come in your business name and you can use them for your business expenses, okay? After you do that, then you want to go on to the cash credit. So this is where you go and you get your Spark card or your Amex or your Chase or, all of those cards, Capital One, all of those cards. But usually what happens once you get here, you've built up enough business credit where you will no longer have to put your social security number on the application. They're just asking you for your EIN, because once they pull that EIN and pull that business credit, they don't really care too much about your personal credit, because they see that you've built it up enough where you have positive, your paydex score is over 80, and it's like instantaneous. So this is what I mean by following a system. So many people will start with the cash credit, not knowing that you need to start with the trade lines, go to the other, they don't know that there's a process. So they start here and they get denied and they wonder why. Well, you don't even have a paydex score, right? And you need to have at least an 80 paydex score in order for you to build this type of credit, okay? I'm going to run through a few more. And I'm going to stop at some of the ones that I really want to hone in for you guys. So the other is unsecured financing. So this is when you have that credibility, you have some trade lines, and you go into like your credit union and you get some unsecured financing. Then before that, you could even do microloans. And this is with the CDFIs. So the microloans in Washington, the micro lenders in Washington, CDFIs, meaning Community Development Fund institutions, are Craft 3, Ventures, Nonprofit, Business Impact Northwest, Evergreen Business Capital. Those are the ones that I know of, and there may be others, but those are microloans, and usually those go up they're smaller and they absolutely lend to startups. You don't have to be in business for 2 years. You do need to have projections and a business plan. And again, Fiscal Finesse can help you to develop those, okay? Then you have the 7A program. So this is one of those loans for real estate. It can be used for short-term or long-term working capital. You can also refinance your current business debt with the 7A loan, purchase furniture, fixtures, and supplies, and that goes through the SBA through some of the lenders. Same with the 504. The 504 loan is usually for purchase of real estate and construction. So if you were at the Black Business Leadership Conference this past Saturday, you heard Lori from Evergreen Business Capital talking about 504 loans and how you don't have to have personal property in order to have business property. This is the one that she was talking about, okay? Another thing that I want to talk about, and the reason why I want to talk about this is because there are so many of my clients that go and get a loan through PayPal or Square. Those are the absolute worst loans that you can get. And the reason why is because those interest rates are ridiculous. They're actually predatory. When I look at some of those lending statements, I'm like, do you realize that you are paying like 39, 60% on this money? By the time they take their money and give you the rest, you're paying such a high percentage rate, it's ridiculous. And that to me is predatory. So I tell clients all the time, when you get to this, when they start sending you those, hey, I see you got a lot of transactions coming through your account. Do you need to borrow $10,000 and you just pay us back, as your payments come in? No, don't do it. And if you've already done it, guess what? It's okay. Pay it off as soon as possible with some of these other loans. That interest rate is ridiculous. We can talk about interest rates and predatory lending for eons, okay? Because that is a pet peeve of mine. But I'm going to stop right there. Again, I have a ton more I can go through, but we don't have time. But what I will say is you do have the ability to sit down with me, with one of the other service providers, and talk about what this looks like for your business, because it could be totally different. What Laquita needs and wants for her business at the stage that she's in could be totally different for what Miko needs for her business in the stage that she's in. And so having this general information is very, very useful, but sitting down with a coach and identifying where you are, where you're trying to go, and getting a customized solution is that much better, okay? I do want to say, we've learned about the influences on your credit, the business credit elements, the most needed items when you're applying for credit, and the types of business credit. That's exactly what we said we were going to do. I'm going to give you all about 30 seconds. For those of you that haven't already, please use this QR code or this link and provide a review. As I stated, this particular masterclass was brought to you complimentary through SoundTransit and the Seattle Public Library. But this information, as we all can attest, is super duper valuable. And so your payment is just simply a review. You can write a review or you don't have to. But I'm going to give you about 30 seconds and then I'm going to move on to some bonuses, which is some trade accounts, as well as some bonuses for your personal credit, and then also some resources for you to move forward in your business. Thank you, TL. All right. Even if you're not able to do it now, that's fine. I am going to move on. So I know we had a class earlier with Tiara, and thank you, Tiara, for being here now, about personal credit. Your personal credit absolutely is a reflection of what you will possibly do with your business credit. Your history does not have to be your future, but I do want to say, do your very best to improve your personal credit, to have a good personal credit history before you start building your business credit. No, you don't always have to, but we should, right? We should be responsible for all of the debts that we have incurred. This right here is a bonus. This is a tier 1 trade accounts, but anybody, you can Google. You can Google net 30 term accounts, net 60 term accounts, net 90 term accounts, and you'll bring up a list. You can put it in Chat GPT if you want to, right? But these are just some that I put in here for you all. This right here is a masterclass replay. So if you want to replay any of the masterclasses that we've done, you can use these QR codes, and I'm going to drop it in the chat as well. So we have the business credibility class, which was at the beginning of this week. We have a Finesse My Revenue Stream class that we did last month, and a Finesse My Revenue Projections that we did earlier this month, and Finesse My Pricing. So I told you, with Fiscal Finesse Consulting, we are in the business of helping you to really look at the financial side of your business. So when it comes to pricing, financial projections, revenue streams, credibility, credit, that is what we do, okay? Lastly, here is a list of additional resources. Again, this masterclass is brought to you by SoundTransit and Seattle Public Library. They have so many resources for you, not just contracts and you know, with SoundTransit, but also support, technical assistance. That's the reason why they put this on, so you know that they value BIPOC businesses and doing business with BIPOC businesses, okay? And then lastly, if you look at our website, we have some free guides and some giveaways. You know, we have a ton of things out there to assist you with your business sustainability journey, okay? I'm going to leave this open for a couple minutes. If you have any questions, or if you have anything that you'd like to put in the chat or anything, this is the time to do that. But I'm going to leave this open just in case you are still grabbing information out the chat, or if you'd like to ask any questions, even though we are beyond the hour, but I'm willing to stay here and answer questions if need be.
Jennifer Ness, I would like to say thank you first, and I do have a small ask.
Yes, ma'am.
Good evening, ladies. I want to first say I appreciate everything that TR did for us this morning. It was outstanding. And Janae, thank you for providing your email address for me. I am currently working with Keep It Local Tacoma, and I am opening a financial services office. I've been a business owner in Tacoma for 20 years. I run a successful business called Powerhouse Events Staffing and Security, where we offer armed and unarmed security to private individuals, as well as some nonprofit organizations like the MLB and the NFL. And I'm selling that business this year, and I am launching a new business. And in doing so, part of my requirements of my business coaching with Keep It Local 253 is to send out a Google form asking business owners